Over the past few weeks, billions of dollars have been wiped out in crypto liquidations. But here's what most are missing. While traders are getting flushed out, Wall Street is accelerating into crypto faster than ever. We're talking tokenization, institutional flows, and a shift that could reshape the entire market. And if you're only watching price, you're already behind. This content is for educational and informational purposes only and is not financial advice. Always do your own research. Welcome to Ledger Pulse, where we break down what's actually happening in crypto using real data, real signals, and real capital flows. If you want to stay ahead of the market, not just react to it, make sure you're subscribed. Let's dive in. Bitcoin dropped sharply today, following failed US and Iran talks, signaling what could be a volatile week ahead. During that move, the market saw a rapid wave of liquidations. One report confirms 115 million liquidated in just 60 minutes, and this wasn't isolated. Another example shows a trader, James Wynn, who was short Bitcoin getting completely wiped from 100 million down to just $900. That's the reality of leverage, and it highlights something very important. This market is still heavily overleveraged. There's a clear warning being echoed here. Why you shouldn't be playing with leverage. Because what we're seeing isn't just volatility, it's forced liquidation. When trades go wrong in leveraged positions, they don't just lose value, they get closed out completely, automatically. And based on reactions to the liquidation data, most of these liquidations are retail traders. Overexposure is still high, and risk management is lacking. This creates a pattern. Sharp moves, liquidations, more selling, and then deeper moves. And that cycle feeds itself. But there's an important observation in the data. While retail traders are getting wiped, there are signs of accumulation. Some commentary around the liquidation event suggests retail positions are being flushed out. Meanwhile, whales are quietly buying the dip. This creates a split market. Fear-driven selling on one side and strategic accumulation on the other. And that tension is what defines these moments. Now here's where things shift. Despite volatility, Bitcoin ETFs just recorded their highest daily net inflows since February 25th. That's a major signal, because while short-term traders are getting liquidated, institutional capital is still entering the market. And ETF flows matter because they represent structured demand, regulated access, and longer-term positioning. So even during price drops, capital is still flowing in. Now let's take it a step further. BlackRock accelerated crypto acquisitions this week. Through its spot ETFs, it accumulated 589 million in Bitcoin and Ethereum in just 4 days, with 474.5 million in inflows into IBIT alone. This is happening while volatility is high, which tells you something important. This isn't reactive buying. This is strategic accumulation. Now, we zoom out to the bigger structural trend, tokenization. Recent data shows massive 5-year growth. Stablecoins are up 430%, tokenized funds 51,609%, tokenized commodities 3,287%, and tokenized stocks 6,056,252%. And the takeaway is clear. Tokenization is winning. This isn't just growth. It's a shift in how financial assets are structured. That trend is reinforced by institutional outlooks. A report tied to JP Morgan suggests tokenized real-world assets could grow into a 13 trillion market by 2030. That includes traditional financial instruments, real-world assets, and on-chain representations of value. This is no longer niche. It's becoming a major financial sector. And finally, Morgan Stanley is weighing deeper involvement in crypto, including tokenization and tax strategy integration. The key message? Even major Wall Street firms believe this space still has a long way to go. So when you put everything together, liquidations are wiping out overleveraged traders, volatility is being driven by macro events, retail is reacting emotionally, institutions are steadily allocating, and tokenization rapidly expanding, this is a market in transition, not just in price, but in structure. So the real question is, are these liquidations a warning sign or an opportunity? Drop your thoughts in the comments. If you found value in this breakdown, like the video and subscribe. If you'd like to hear more, check these out here. And as always, stay informed, stay sharp, and we'll see you on the next one.